All right, and we are officially live, broadcasting only on onedealaway.com/live. This is Money Matters. And my name is Nev, and today we have a show, a Halloween scary show. We're going to be talking. Yesterday we had a Halloween scary real estate show. Today we're going to have Halloween scary everything else show. So today we're going to be talking a little bit about the stonks, about gold, about Bitcoin, about all kinds of other things. So, of course, if you have been paying attention, watching things here on Money Matters, you have realized, as I've been showing you, or if you're following me on Facebook, Instagram, and Twitter. I'm back on Twitter. I am back on Twitter. Okay, so I tweeted like one thing in I don't know how many years for the first time, but I'm back on Twitter, y'all. So Twitter is another place where we can hang out. But I have already shared with folks of like the volatility that we're seeing within the stock market and the lack of volatility, which could be potentially a very good thing in Bitcoin. And the reason I say it could be potentially a good thing is that if this is going to be sort of that like stable asset currency thing that people just hold on to, and this is where the value is going to be held, well, you want that puppy to be as stable as possible. You don't want that to be like a rocky thing, right? It's kind of like a foundation for building a house. You want that foundation to go nice and deep, to be leveled off, to be super strong, so that when you put your little house on there, it can hold the weight, and it can hold the weight as you expand. The last thing you want to do is build a house on like rocky bottom or sand and stuff, and like the moment you step and like twists and stuff. So nobody wants that. So that's what I'm saying. It potentially is a good thing. Now I know some of the folks that are using Bitcoin to trade and do that kind of stuff. They were like, no, 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 we need volatility because that's how we make money. I get it. But that's where I think the alt market exists. And that's where I think you can go in and play in the stock market. So, anyways, we'll see what's going on, what's been happening, not just with the stock market everywhere, but also with the tech stuff of what's going on. We're going to be taking a look at some of the stories uh, when it comes to the bonds, right? And so we'll see kind of what the prediction is, where we are, and what the future holds. So let's do this. And good morning, good morning, good morning. Happy Saturday, happy Halloween to everybody watching this live here at onedealaway.com/live. Make sure you sign in, make sure you say hello, and hold on to your cues for the A's at the end of the show as always. If you're watching this elsewhere, like, I don't know, YouTube, Facebook, library, whatever else I'm trying to get, like I said, I'm trying to spread out, spread the news, spread the news, spread the goodness. If you're watching anywhere else, do me a huge favor, smash the like button if there's such a thing. Maybe it's thumbs up, maybe it's a check mark, maybe it's I don't know, whatever. Do me a favor, smash it, por favor. Thank you very much. Do subscribe to the channel. There's going to be a button somewhere to subscribe or join some sort of something, and hit the notification so that if available again, so that when the new show shows up you get notified. Speaking of the new show, today is a new day, new light, new show, and let's get started. We're gonna kick off with the big tech earnings, and they are out. And of course, who has announced the earnings? Well, Facebook, Apple, Twitter, Amazon, and Alphabet all reported earnings on Thursday to a tough crowd. Yeah. So what happened is the part that I always keep saying. I don't understand how this works. Because you would think that when a company reports higher earnings, that the stock price would go up, right? I mean, they made more money than what we expected. Time to celebrate with better stocks, right? Wrong. It does not always work out that way. You have companies that file for bankruptcy, and what happens to their stock? it goes to the freaking roof. It's supposed to fall down, and sometimes it falls down and then goes to the roof. And then we have stocks that report earnings and they're doing amazing. And what happens to their stock price? Whoom, takes a dive. And that is exactly what's been happening this past week. Everybody thought that, hey, we're expecting really good results, really good, price per earning kind of reports, all that stuff. Look, tech is growing. Everybody's going on tech. Everybody loves tech. I mean, Facebook has more users than ever. Twitter, everybody's tweeting. Even Nev came back to tweeting after years of hiatus. You know, Google is stronger than ever. Yes, they're going to talk about breaking them all down, but for right now, they hold the internet. They own it. Of course, their price is going to go up, and that is not what happened. Look what happened to Facebook yesterday. So this is day after the announcement, down 6.3%. In a 5 day, look what's been happening. Down, 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 sideways, slightly up, sideways, down, 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 up, sideways, down. I mean, this is a down, down, down thing going on. Look at this. This has been super volatile. I mean, you know, I thought that these things over here, and right over here, those are known as bar charts. And I thought that they only existed in crypto. But clearly, it is exists in real stocks right now. At least it does in Facebook. Look at this. I mean, bar chart, it basically looks something like this. Let me see if I can. No, that is not what I want. Oh, I always here this, and then you can go away, right? All right, this is what the bar chart looks like. Let me see if I can. It goes up, sideways, sideways, down, right? And if you add eyes, doesn't it look like Bart Simpson? I think it does. I think it does. That's why they call it the bar chart, and I think it's adorable. I think that's adorable. Anyways, as you can see, so this is the 1 month of what's been happening with Facebook, but over the past 5 days, it's I mean, clearly there's a top over here at 283, and now we're down at 260, and yesterday was just a downward thing. Uh, let's see, Apple. All right, here we go. Apple. Just in case you're thinking it's only Facebook, no. Apple is down yesterday alone 5.6%, and this is what Apple's chart looks like. It's just straight on down. Straight on down. And doesn't it look familiar? Doesn't it look familiar? The only difference is at least Facebook is still in the green. Apple is definitely in the red. 124 price in October 12th, and 108 is where we are right now. And here it is. This is where we were at the top, 134.18, 108. So we've lost what, $28, something like that, right? Doesn't math right sound right? But about $30, a little bit less than $30. So there you go. This is kind of what's going on and what's been happening. Shares of Facebook, Apple, and Amazon fell roughly 6% in Friday trading, with Twitter taking a greater than 20% hit, and Alphabet shares were up 4% in afternoon trading. Trading, not training, trading. All right, so let's really take a look at Amazon. All right, Amazon, because Amazon has pumped insanely. Okay, I just want to point that out. That when the pandemic started, before we even had a crash in March, they were trading just south of $2,000. Now they're well over 3,000, and here it is. This is what has transpired: 5.45. They are basically down. In 1 month, they're down. In 6 months, they're still up, with September 2nd being that sort of the highest date at 35.31. So we've lost about $500. About $500 since the whole thing. This is that February high thing. Remember, there were about 2,000. This is the March crash, and look how much that thing has gone. It's doubled in the worst economy. I would say actually the depression of biblical proportion, as I like to say. So hold on, I gotta get some light going on because getting light over here, I gotta get light over there. So speaking of the light and the out there, by the way, woke up. It's like in the 20s, super cold. I'm not used to that stuff. I mean, it was 80 2 days ago, y'all. So the fact that we went, okay, it wasn't 80, but it was definitely 75. So went from 70s into the 20s, and my little body's like, holy mackerel. The cat is also freezing, so we're both trying to adjust to the winter temperatures. So this is what's going on over here. Now let's like take a look at the Twitter. Ah, they said almost 20. No, 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 that's over 20%. Ah, yeah. 21% down. Holy mackerel, look at that gap. I mean, that just gapped right on down. You didn't even have a chance. You didn't even have a chance to sell it before it just dumped on you. And that's wow. I mean, look at this. It looks even worse. The further out we go, the worse it looks. Okay, it doesn't look that bad here. Uh, but this is year to date. This is where we were in February. Then we kind of crashed down here in March, and we're still up where we were in February. So Twitter is still holding well, but it's definitely ugly on a day. Definitely ugly on a 5 day. Super, super ugly. Like I said, it's just when you look at this stuff, you're like, oh my gosh, ugly. Okay. So this is basically what is going on. That market analysts were largely keeping their expectations for the tech giants high, and yeah, everybody was expecting that they're going to perform really well, which they did. They were sharing good stuff, and kaboom, kaboom happened. And so now I thought that this was a very, very timely article to talk about because A, it's Halloween, and you're supposed to get scared as if 2020 alone wasn't scary enough, and it's not even over yet. So that is what's going to happen, right? Scary time on Wall Street, Wells Fargo warns. So here's what they're saying. Head of macro strategy, his name is Michael Schumacher, Schumacher, Schumacher. It depends on which language, right? Like where, which. I mean, I know we speak English over here. I'm just saying, it. Schumacher is. But I could be wrong. I could be wrong. So, Michael, my apologies if I have butchered your name. Head of macro strategy warns Wednesday market turbulence may just be a preview of what's ahead. And I've been saying the same darn thing. I've been saying the same darn thing that things are going to start getting rocky, and then the rocks are gonna start rolling down the hill, down the hill. So think about the U.S. election, which is coming right after this weekend. COVID worsening, yeah, that's already started to happen, and all sorts of news items coming out in the couple of next weeks. It could be very scary time. On Wednesday, S&P 500 and Dow had their worst day since June 11th, and we're going to be taking a look at all of the indices. Jitters over rising virus cases drove the latest sell-off, and the chance of election results are delayed is going to create even more potential panic on the Wall Street. And I agree, and I don't think we're going to get the news right away. And if you remember last time we had an election with at least one of the gentlemen, uh, the news weren't broken until like 3 o'clock in the morning, and then the futures market were doing all kinds of crazy stuff, and things were selling, and things were buying. So right now there's some reports that are saying, well, the market is pricing itself for a Biden win, which is what they're announcing. But I want to point out one thing, not that this is a political channel in any way, shape, or form, but I do just want to point one thing, just for my own insanity reasons. Uh, you know, Last time we had the very same thing where everybody's like, Hillary's gonna win, Hillary's gonna win. Everything was pricing in for Hillary, and then kaboom, she didn't. So I don't know if we're going to have a repeat of 2016. where we think Biden is going to win, Biden's going to win, Biden's going to win, and then like kaboom, right? Or is it going to be Biden's going to win, Biden's going to win, and truly Biden's going to win? I don't know. I don't have a crystal ball. I have no clue who is going to win. Nor do I really care. I'll be honest. I know that sounds horrible. Maybe, people, I should stop saying that publicly because people are going to come and harm me. Like, how can you not care? I don't. I don't because, A, they're not as powerful as people give them credit for. There's the Congress and the Senate and all of the other, houses on the hill that you have to deal with, right? So that's one. Two, some of these economic and market forces and all of that stuff, it has nothing to do with them. That's a systematic thing that, like, you have to blow up, and you would have to actually convince everybody else to want to do it. Good luck doing that. Nobody wants to blow up things. Well, I mean, if it can harm them, I guess. So anyways, that's kind of where all of the stuff comes in. So I do think that between the uncertainty with the presidential election, with the direction, with the politics, with the policy, with the health stuff, things are going to start turning pretty ugly. And there's additional pieces. I'm going to share with you in just a moment that we've already are seeing. And you know what? They're saying the chance of election results being delayed, be concerned over the next week to 10 days. I'm saying be concerned over the next couple of months, not just week to 10 days. Yeah, for election, week to 10 days, maybe a little bit longer. I don't know. Who knows? It could take forever. They could go for a recount. And remember, we had that too. So anything can happen. Besides the impact on stocks, the worsening pandemic, election uncertainty have also been putting pressure on the U.S. Treasury yields. Over the past 5 trading sessions, the benchmark 10-year Treasury note yield is down more than 5% and closed Wednesday at 0.774%. But this has changed, so stay tuned because I'm going to show you. But according to Schumacher, I'm going to go with Schumacher. I don't know. You let me know, y'all. The sophomores in yields is temporary. We'll see. The lawmakers will ultimately pass a virtual aid package. Sorry, not virtual, virus. They're saying virus. I'm saying virtual. Lawmakers will ultimately pass a virus aid package, even if it comes as late as February, which is the earliest that I believe would come. Like I said, it just depends on who gets elected and when and how, because it's all I told you it wasn't gonna come before the election, which was the truth. I was educationally guessing. Obviously, I don't have a crystal ball, so don't be calling and asking, is it gonna snow tomorrow? Because I don't know. I don't know. I have no clue. I mean, they say they won't. We got our first snow here, and it's freezing. Super cold. Super cold. It's in the 20s, and I'm like sitting over here in my hoodie, like, come on, heat, let's go. So lawmakers will. Okay, we already talked about that. So year's end for the 10-year yield is 0.9 to 1%. Next year, he sees it between 1.25 and 1.50%. So he believes that the yield for bonds is going to go up, which means prices are going to go down. And if the yield goes up, he believes that inflation will start kicking in. But many people, me included, do not think that that is going to happen. I believe that it's going to happen if and when, and only if and when, money reaches people directly. The trickle-down economics does not work. Quote me on that. You can quote me on that one. But now that we're looking at all of this stuff, I think we want to take a look at additional pieces. The indices. Indices. It's ugly, y'all. S&P down 1.21% over the past, one day. I wish that this would update, because that would be really helpful. So 5 days, look, we went from 34.34 to 32.71. Even 1 month, man, we are down 35 to 32. 6 months, we are still on up from this, right? but not from the highs, not from the highs. So we didn't lose as much. S&P didn't lose as much as some of the stocks, but do remember that many of S&P, many of Nasdaq, many of Dow Jones are the stocks that actually have tumbled. Big deal, big one. So this is what happened with the Dow, as you can see, kind of started to slide down, tried to pick up, went back down, and sort of ended on the jump up kind of note for the week. And who the hey knows where it's going to open on Monday, down 0.59%. So it doesn't lose as much, but it's definitely down. And this is the one of those that, down from 28, 892, 894 to 26,511, and during the course of not even a month. And then still right over here in February, it was 29,551, right? This is the high from what I can see. And 29 were 26.5. So Dow is the only one, right, that hasn't actually reached the all-time high of February, and it's still going in the negative. S&P actually has beaten it, but just slightly. Nasdaq is the only one that truly has gone much, much higher than the February highs, because it's all tech, right? But we're seeing tech now starting to break down. So we'll see how this all turns out. You can see this was yesterday, right? A day trading thing. Here is the 5-day, and you can see sideways down, sideways down, sideways down. It's a theme that we are seeing, right? Look at this. Sideways, then we have down. Then kind of came up, but then it's definitely the steps on back down. Over the 6-month period, the high was September at 12,056. Right now we're sitting at 10,911, and year to date this is that February high at 9817, still above it. However, please do note that Nasdaq did dump 2.45%, and I think I could be wrong, so please don't take this as a financial advice, as a trading advice, as an advice, or anything else. This is just my thinking. I think. That's why I start with I think. I didn't say it will. I'm saying I think. I think that it's going to continue to go down, and it's going to be much more volatile over the upcoming weeks and potentially even months. Could we go and hit like true bear thing? Yes, it is absolutely 100% possible. Hold on, let me fix the light stuff. Much better, because then I can control a little bit of like the insanity. The sun is up, hitting the snow, and that's what happens. That's what happens. Crude oil. Well, crude oil went down 1.24% for the day. If we take a look over at the 5 days, you can see again very similar themes of what's transpiring over the past month. We've sort of seems like we've kind of hit the peak, and we're starting to turn back around. Over the course of a year to date, oil is still down, not as down as this. I mean, this is just crazy. That April 20th, whatever, when it just went negative, that is crazy. I mean, that's one for the books. That's one for the books. But you can see that even over the course of 5 years, we are down. The only thing is that max. So when you count it from the 2000, we were at August 1st of 2000 is when this chart begins. We were at $33.10, and now we're at $35.72. So you are up a whopping $2.50 over the course of 20 years. That is insane. That is insane. $2. You've earned $2 over the course of 20 years. Don't spend it all on at once. I'm sorry. That's horrible. That is absolutely horrible. Okay, what's going on with the Treasury yield? So we read the article Mr. Schumacher, and again, if I'm mispronouncing his name, I apologize. That yield has been holding at 0.774, which is true. It has been holding that for a little while, and now look, it actually has gone up. So he might be onto something. He might be onto something because right now we've gone up 2.99%. That is huge. So sitting right now at 0.86, at 0.86. And here, look at this. This is where we were. This is what's been going on. So I don't know what to tell you all. It looks like things are starting to shift in the bonds. I mean, obviously, this is where we were in January, right? At 1.8. Then we dropped down in February. Here's that February 12th date. Where is it? Somewhere around here. There it is. 1.6, then kind of came kaboom in March at 0.499, then kind of went back up in March 18th at 1.26. That's when the crazy stuff was going on, right? Then we kind of came back down, calmed down at zero point 0.5, and we've been sort of sideways, like some up, some down and stuff. But we're starting from about August, right? Early August, we're starting to kind of pick it back up, which interestingly enough, the stocks in the last month are starting to kind of go down. And so we're seeing perhaps that there is some sort of answer happening, a dance of finally starting to realign, because for a while they were not aligning at all. Gold is up for the day but down over the course of a week. So gold went up a whopping 0.58%. So nothing huge. It went up $10. But over the 5 days, you will see that it actually has gapped down. We have been at that 1900, cannot break that 1900. As you can see, the 1934 right over there in October. The highest one was August at $2,051.50. And it's been coming down ever since. Speaking of gold, I actually do have news for you about central banks. Central banks are starting to sell gold. Yes. Shocked? I am too. But here is the even more shocking news that is going to come right after this. So you want to stay tuned in. You're not going to believe what I am about to tell you. So we're going to go in, take a look at the gold stuff, and then you are going to want to actually watch and listen the next thing that is happening with central banks, because this is one of the things that we have been waiting for. That's right, we have been waiting for to happen, to give legitimacy, and now truly things can go to the moon. So don't go anywhere. You want to watch this. But first, central banks sell gold for the first time in 10 years. And this is basically they're talking about that there's this big old sell-off, and it turns out it's just two countries that are suffering a big deal. And why are they selling? Because they need dollars. So perhaps the milkshake theory is turning to be true. So everything is starting to play out. How exciting of a time do we live in? Okay, so in the third quarter of 2020, central banks switched to being modest net sellers for the first time in a decade, reducing global gold reserves by 12.1 tons in third quarter compared to a purchase of 141.9 tons a year earlier. That is a big difference. You were buying 142, almost 142 tons, and now you're selling 12 tons. That is a big deal. And you can see it that last time there was a selling stuff was in the third quarter, fourth quarter of 2010, and now in the third quarter of 2020 we are seeing that the central banks overall central banks are net sellers. Now what was going on in 18? Look at this. They were buying like crazy, 250 tons in the, what was that, second quarter of 2018. In 2019, the second quarter, right, they were also buying at like 240 something, right, 230 something, 240 something. And those were the big spikes in the 16s and 17s. Not much was happening, and now we're starting that it's turning down, and we've gone negative. Is it going to be negative for the second quarter in the row? I don't know. We'll find out. I'm certain of it if the fourth quarter of 2020 is going to be net selling as well. We'll find out. The selling was the result of just two nations that were reserve strapped, which rushed to convert gold into dollars. Gold into dollars. So maybe the narrative that the gold is the one doesn't necessarily hold up right now. This is a very, very exciting, very, very interesting piece. And this is the part that I was saying when everybody's going into gold, maybe it makes sense for you to go into dollars and vice versa. Or if you don't know where it's going to be, have a little bit of everything, because then whichever way it goes, you can, like, it's called hedging. It's called hedging. The big boys do it, the big girls do it. Well, why not us, the little old mortals, right? We should be doing it too. Turkey and Uzbekistan. Uzbekistan. Do you say it Uzbekistan or Uzbekistan? I say Uzbekistan, but I also am not from US. So, we also, don't call USA USA where I come from. We call it SAD. So, so there you go. Um, it stands for the same thing. We just translate it a little bit different, you know. Um, so, anyways, um, let's see. Okay, Turkey. Turkey, which is undergoing an unprecedented current and capital account crisis, which has drained the central bank's reserves to almost nothing as the Turkish lira is disintegrated, reduced gold reserves by 22.3 tons during the quarter. And this particular country is well on its way to becoming the next Venezuela, a country that liquidates its gold to keep the lights on. And we have been talking quite a bit about Turkey and what's going on there, not on the political end of things, which I know that there's a lot happening with the political end of things in Turkey and in that particular area of the world, yet one more time. But we were talking about the financial issues, that their inflation was really starting to pick up, and their lira, their value started to really drop. So we've been talking about it when we've been talking about Bitcoin, that people are starting to jump into Bitcoin. They want the dollars. Gold is not necessarily something they've been wanting. They need something liquid that they can trade. So we've been talking about that stuff already. And if you want to watch some of those episodes, you can find all of them. Everything is archived in YouTube, on the YouTube channel Money Matters. And between the money, investing, crypto, and real estate, you will find everything. Or simply go into Money Matters and you get the whole 9 yards. And we've been covering it. But this is what's going on, right? So they haven't engaged in a full-blown liquidation yet. However, there is a potential that this could happen. So this is what's going on. Foreign currency reserve increase in week October 18th central bank reserve. They're looking at I think this is the Turkey, right? So this is their gold, this is their foreign currency, excluding country swaps, foreign currency reserve, and then the total. And as you can see, the reserves are, started to kind of go down, started to slowly pick back up. Then it kind of started to go down. So we'll see how it goes. On a year-to-date basis, the country remains the biggest gold buyer, adding 148.7 tons, although the reflection point seems to coincide around the point in the time when the lira suddenly collapsed. Turkey's official gold holdings now amount to 561 tons and 47% of the total reserves. Uzbekistan reduced its gold reserves by 34.9 tons during the third quarter of 2020, and for their gold reserves is now at 307 tons, still account for 56% of total reserves. Now, interesting piece to also note that there were additional central banks that were selling it. So not just Turkey and Uzbekistan, but we also have Tajikistan, Philippines, Mongolia, and Russia. They were actually selling small but notable amounts of golds during the third quarter. So now this actually brings something very interesting for us to think about and talk about. We've seen the gold kind of hit that high. we are seeing central banks, which are the largest buyers, right? They can buy way more than you and I, right? Especially if a country can print their own money. Heck yeah, print it and buy. I mean, I would. I would print my money like crazy and then buy assets that you can't print, that you can't change the price of, and wait for that to inflate. Not inflate in a sense of like you know unhealthy inflation of the monetary supply, but increase in price, inflate. And then I mean that's basically kind of I think what many of these countries may look to do. But anyways, it is very interesting to note that, because if they're the biggest buyers, but now they're becoming the net sellers, what will that do to the price of gold? So perhaps Harry Dent is right as well. So not only is the money milkshake theory or the dollar milkshake theory correct, then we also have, right, Brent Johnson, I believe it is. Then we also have Harry Dent, who's been calling that the gold is going to actually start going down, might be correct, because like I said, if they become net sellers as opposed to net buyers, well, price, right, is the equation of the supply and the demand. And if the supply remains the same or continues going on up, but the demand starts dropping, well, where does it go? It goes down. It goes down. So if the supply of what is being made remains the same, but then you have more central banks wanting to sell, that means that the supply ability of the things for sale is way higher, but the demand remains the same or lower, because some of the central banks, instead of being on the demand side, now are on the supplying side. The prices could tumble, and could tumble a big way in relatively short period of time, and in a short term. So perhaps then we are starting to see very serious evidence that we are 100% absolutely in deflationary market. Now, if that is the case, that we are absolutely in a deflation, in a depression, that means that cash is king, as are the bonds. So there we go, our bond king on YouTube channel, Van Stephen Van, I think that's the name. As you can see, I'm trying to watch as many different channels as I possibly can to see what people are saying. But then, he's then correct. He's then right to say, no, 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 guys, bonds. You got to go with bonds, because we're in this particular market. So then would also make Ray Dalio wrong, because he was saying get out of the dollar and the bonds, get into the stocks. So that would make Dalio wrong. I don't know. This is very interesting. Let me know what you think and where you stand. But I'm just looking at the stuff, right? Like, I'm not trying to be right or wrong. I'm just looking for what does make sense. What is my next move? What is my next move? How do I play this game? How do I play this game? Which direction are we going to go? And evidence is starting to mount up that deflation is where we're heading fast, heading fast, going there. That's the destination. Now, will we hit off and bounce off and go into inflation? Who the hey knows? But right now, we are going down, down, baby. I should not sing. I am a horrible singer, so I'm not going to sing. But I don't know why I changed the channel or the view thing. One thing that is interesting to note: total bullion demand fell 19% year on year, the lowest since 2009 third quarter, largely thanks to continued weakness in jewelry buying. So not only are the banks not buying, now the jewelry is not buying. Indian jewelry demand fell by half, while Chinese jewelry consumption was also down. And a lot of it has to do with the high prices. People are not buying. People are not interested in anything. So you can see that down. Overall jewelry demand fell to 333 tons, 29% below an already relative anemic third quarter of 2019. So again, we are seeing central banks are selling, jewelries are not buying. Very important things, because those are the biggest buyers, right? Bar and coin demand strengthened, gaining 49% year over year. which is 222.1 ton, as investors scrambled to buy paper gold. That's right. Many people, when they went into it, they bought paper. Much of the growth was also in official coins due to continued strong safe haven demand in Western markets and Turkey, where the coins are more prevalent form of gold investments. So, third quarter saw continued inflow from gold-backed ETF, which saw an 8th consecutive quarter of inflows. Third quarter inflows to 272.5 tons pushed year-to-date flows to a record 1,003.3 tons and gained global holdings of gold-backed ETFs to a new record of 3,880 tons. So, who knows how this is going to end? What I do think is that overall, gold. I mean, we do know that the gold supply declined 3% year on year, as the production, mine production, remains depressed. However, we are starting to see that there is some recycling of the gold, meaning, somebody has it, they want to sell it. So we'll see how it all things is going to play out. I mean, I don't have a crystal ball at all, but it appears that we might be sort of sliding down to lower prices of gold. Will they pick back up at some point in the future? Absolutely possible. Um, will we hit the hyperinflation at some point? Who the hey knows? Sure, anything is possible. But right now, it appears that we are in a highly, highly deflationary time period. Now, I did promise to finish strong, delivering the mind blowing news ever, ever. So, I hope you are drinking your little coffee. Maybe you put in something else to make it a Spanish coffee, Irish coffee. I don't know. Why do they give it always some sort of European name for the coffee whenever you put booze? What are you trying to say about us? That's what I want to know. Oh, wait. Yeah, I actually do that. And we just call it coffee. You have a name for it, but we just call it coffee. All right, all joking aside, here it is, and it's going to have something to do with this graph. Now, I'm going to show you the graph. You see if you can guess what this is. Now, for those of you that are not watching on the graph right now, I'm going to give you a price and see if you know what it is. And here we go. The price is $13,854.29. Okay, what has been flirting with the 13,000 level that we're watching this? That is also promoted and provided by Coin Market Cap. That's right, Bitcoin. Bitcoin. That's right. Bitcoin is at 13,854, and it actually has been going up and up and up and up and up and not so much. I mean, up, but not so much. I don't know why it's, yeah, okay, I know why it's showing green. So we still have this whole thing, but look how beautiful this is, and it's doing incredibly well. But what does Bitcoin have to do with the central bank? Holy crap, that's right. There's a flag of Iran. Again, this is one of those things. How do you say it? I say Iran, but I know some people say Iran, and I'm going, I ran too yesterday, but now we're talking about Iran. So, Iran has reportedly revised the country's cryptocurrency regulation to require licensed Bitcoin miners to sell their coins directly to the central banks to use for fund imports. Holy mackerel. That's right. We have a first central bank in the world to be officially buying Bitcoin. Amazing. Now, they're not using it as a reserve. They're using it to fund imports. But that's a pretty darn same thing, if you ask me. This is crazy. This is crazy. We have been expecting that there's going to be a country that is going to come in and do this. I just didn't know which one was going to do it. And I figured it had to be one that was having a hard time with United States censorship, with the money transfers and that kind of stuff. So, of course, Iran makes sense. Now when you're connecting the dots, you're like, duh, it would make sense. Iran's government has amended its cryptocurrency regulation to enable the country's central bank to fund imports with Bitcoin legally mined in the country. The measure proposed by the Central Bank of Iran, CBI, and the Ministry of Energy requires licensed crypto miners to sell the coins they mine directly to the CBI. The miners are supposed to supply the original cryptocurrency directly and within the authorized limit to the channel introduced by the CBI. The new law is vague and ambiguous. For example, it does not state how the central bank will price cryptocurrencies or the exchange rate between dollars and reals. The requirement for miners to report their output to the central bank is not seen in other industries, concluding that the new law will likely reduce the industry's attractiveness and significantly lower miners' profit margin. It's very, very possible. So now they're like going through their own uncertainty and stuff. Now they're not buying it willingly, so like they're demanding it. So I mean, what do you expect? What do you expect? It's not like the freest of the countries in the world, right? So this kind of makes more sense. But the fact that we actually do have a first country that is buying it, um, forcing the people to sell it, but they're buying it. They're a willing buyer. You just might not be a willing seller. Slightly different argument, but they are buying it. Now, they have issued over 1,000 licenses to crypto miners, and power plants in Iran are allowed to mine cryptocurrencies, and Bitcoin miners have been granted exclusive access to electricity generated from three of them. Meanwhile, 1,000 of illegal Bitcoin miners have been shut down. Well, of course, they're going to shut them down because, hey, what are they trying to do? They're trying to get their Bitcoins, and it's not Bitcoins, it's Bitcoin, but I said it Bitcoins because I was trying to make fun of one of the article writers from a couple days ago. Anyways, they're trying to get their Bitcoin because, for as cheaply as possible. Say, hey, if I had the power to force you to give me, all your Bitcoin for like $1 each, heck yeah, I'd do it. I'd do it. But of course, anyways, so this is where what we're seeing and what's going on. And I do have one final piece. I know I said final news, but this is a final news, and then we go into the Q&A of what's going on with the shutdowns, because we've seen shutdowns happening in Europe. I've been saying shutdowns are coming our way. El Paso returning to coronavirus lockdown could be a sign of more to come in the U.S. So they are basically shutting down in Texas and parts of Texas at least. Now you see New Jersey government is also saying, hey, if I have to shut down the whole place, I absolutely will. And what is also going on and happening is that we here in Rhode Island, I can tell you that certain things are shutting down effective on Monday, and our ability to spend, with people and stuff has gone down from 15 to 10 people. So they are slowly but surely tightening that, nut and making it harder. So certain things will have to shut down. I think gyms, bars, and restaurants yet again. So my heart goes out. I mean, these people are just trying, and no matter what they do, it just comes back and slams it. And you know what? If I was a restaurant owner, I would honestly wonder, like, is the government like in to get me? Because it feels that way, and it does feel that way. And final for the laughs of the scary. So we've done some tricks, we've done some treats. If you like some tricks and treats, smash the like button right now, forward it to others, subscribe, hit the bell button so you get notified when we go live tomorrow. Maybe we might be going live tomorrow, maybe not. I still don't know. I might have to travel for a couple of days before they completely shut us down. I still gotta go and finish some projects before winter comes in. So I don't know. We may or may not have a show tomorrow or Monday, but we'll definitely be back on Tuesday for sure. So Sunday and Monday we might not have it. I don't know yet. And now to give you for the laughs a final treat before we go away. A California school sent a letter threatening to arrest and prosecute a 12-year-old boy who missed 90 minutes of online virtual classes. The letter says the middle schooler is considered truant if he misses more than half hour of any given class. When the boy's father complained about the threat to his son, who happens to be an excellent student and makes straight A's, the school principal said his hands were tied. California laws regarding truancy force schools to send the warning letter and funnel kids into the state prison pipeline. So there you go. Yet another reason to leave California. Hey, there you go. That's it. That's scary enough for me. So until next time, stay forever money blessed. And do remember, you are only one deal away.